Welcome to the Savvy Property Investors Podcast, a weekly show that delivers the best hard-hitting property industry news, business advice, and talks that will get you ascending in the real estate industry. Now, here's your host, the amazing award-winning property and business coach, best-selling author, and serial entrepreneur, Miss Sapphire Gray.
Well, hello, ladies and gentlemen, and welcome to a new year and another episode of the Savvy Property Investors Show. So what's this show about? If you're new to the show, welcome. The show is for newbie and seasoned property investors, coaches, consultants, and trainers, and anyone that's looking at their finances or even going down business avenues as well. Each week we bring you different topics, sharing with you about the business side of your property investments, looking at new businesses, looking at the finances, clearing up debt, and so forth and such like. My name is Sapphire Gray and I'm your host. And every 2 weeks I'll bring you different topics. In season 5, I decided to look at the financial side of any business and also your personal finance as well. Just before the holidays, we was looking at a mini series that we was doing, and we're on that mini series. We're now on episode 4. So if you haven't seen the previous episodes, please feel free to go back to our website. That's www.savvywomen.co.uk, where you will find the rest of the episodes and also bring all this different financial tips and advice to real life. Today, we're looking at APR, so that's the annual percentage rate. What is it, you may ask, and how does it work? But before we do that, I'd just like to remind you of a couple of things. If you haven't already subscribed to our podcast, please go over to any of the platforms. That could be Apple, Spotify, anything, and give us a review on when you listen to our podcast. Share with your friends, like it, just get us out there. If you like what you're hearing, please feel free to share it. Another thing we have a property investors toolkit. This toolkit is really good if you're just starting out in the industry or even want a refresher. It's at a low ticket offer as well at £37. So if you go over to our website, that's www.savvywomen.co.uk, where you can download your pay for your property investors toolkit and download the content. There's loads of videos, there's loads of material that goes with it. I know you're going to really love it and fall in love with it. And it's following in my footsteps. It's a journey that I take on a daily basis in which I am able to do my business constantly, only for a few hours. You may be struggling and want to know what strategy suits you. So go over and purchase this. This is what I've been teaching for the last 30 plus years. This is what I've created myself with you in mind. So if you even are a newbie or a seasoned investor, it really does pay well to go over to this website. You'll be joining an academy, and through that academy, you'll be able to download the walkthrough videos and all the content. And if you've already downloaded it, please give us some feedback. I love when I hear from my audience to find out what you've enjoyed from the show, what you enjoy about the content that I deliver and have free for you on our websites. So please leave a review for that as well. So, as I said, for those who already know me, I'm going to reintroduce myself for those who don't. I'm Sapphire Gray. I'm an award-winning property investors and business coach. Over 30 years experience. You can visit my personal website, that's sapphiregray.com, and you can learn all about myself and my offers and also what I actually do. As I said, in this season, we're looking at finance and the best ways to utilize your personal and business finance. We have different topics in this season, and we're currently in the middle of the 5 episodes that I have for you. So have a look at the previous ones over at our website. And this is really about how to take control of your money. This episode we're talking about is annual percentage, APR. What is it and how does it work? So we've covered previously the best credit check service compared, household personal income. And that's basically the two things that people don't ever look at is what your credit rating is and what is your personal income. Because we all know we've got money coming in. That could be through work, that could be through your business or any other benefits that you may receive. But when you actually put it down on paper, you can actually see what's coming in. This also helps you with the rest of getting your credit file repaired, looking at your credit cards, your loans that you may have out. And if you really are in debt, next 2 weeks we'll be looking at writing to your creditors. And 2 weeks after that, we were looking at 101 money saving tips. So each one of these comes with a free PDF. Please feel free to reach out to us and we'll send that happily to you as well. So today, as I said, we're talking about annual percentage rate, and we're going to abbreviate that to APR. So what is it and how does it work? I feel that these tips will really help you get a better understanding and allow you to review your credit cards or your loans. So after this presentation, feel free to go ahead and start looking at the loans that you have and the APRs that are associated with it or the credit cards you may have. I'd also show you what the APRC is on your mortgage as well. So let's get started. So what is APR? It's the official rate used to help you to understand the cost of borrowing. It takes into account the interest rate and any additional charges or of a credit offer. All lenders have to tell you what their APR is before you sign a credit agreement. Now, you have to remember here, each different lender has a different APR and they're allowed to do that, but they don't have to offer you what they are advertising, and I'll come on to that in a minute. Oh, let's jump in here. So how does the APR work? The APR is used for comparing credit cards and unsecured loans, and it's expressed as a percentage of the amount you are borrowing. So, for example, a personal loan with a 15% APR should be cheaper than one with a 17.5% APR, although you should always check the terms and conditions. It's also worth noting here as well that APRs also include compulsory charges. Some fees, such as payment protection, may not be taken into account. And a lot of people think that, oh, it's covering everything. It may not be taken into account. So please make sure you check. Also, some fees, such as payment, as I said, payment protection. And also, you should read the terms and conditions carefully before applying for credit, always. APR does not cover any fines or late payments. So if you don't pay your credit card on time, they can charge you. I think the rate, some credit cards will charge you £12 for being late. So always be aware that those fees are not included in the APR, but they can charge you extra fees on that. So what is real rates? Also, do you know that card providers can actually have given you their advertised APR to 51% of customers that apply? That means that people can sometimes be surprised by the final rate as they end up being offered. If you compare your credit cards with Experian, you'll show you the rate that you are guaranteed to get. So there's no nasty surprises. Just remember, they are a credit broker or not a lender. So when you're looking at rates, it's always good to see what rate will be applicable to your personal circumstances, not the generic, the personal circumstances. As I said here, the advertised rate only generally goes to 51% of customers that apply. So can APR help you calculate how much you'll pay? So calculating how much you pay in pounds per year can be a little complicated, especially when it comes to credit cards. So I'm not going to go into details today on that. But this is because credit cards have a flexible repayment. For instance, you can pay back more for 1 month than another, provided you don't pay less than the minimum that they require. And your provider will usually calculate the interest on a monthly or daily basis. So the amount of interest you pay annually depends on how your balance fluctuates over the year. For example, if you pay your credit card balance in full on every month that you have an outstanding balance, then you'll pay no interest at all for the year. So that no matter what, the APR will be zeroed out. So if the APR is on your credit cards and you pay off in full, I'll repeat that again, you pay 0 interest rate. But remember that you are actually paying interest depending on the debt of the card. So if you still have a balance on the card, it is always going to be the APR dependent on the debt on the card. So I always clear my cards every month. I utilize it to boost my credit rating. So I clear my debt every month. So if you're doing that, then obviously you're not going to be paying any interest. But if you're keeping it on there, they're going to calculate it on the end balance, and it could be on a daily rate as well. So read the terms and conditions and be very careful about that as well. So what are the difference between representative and personal APR? We're going to discuss this after our short ad break. And when we come back, we're going to be looking at what are the difference between representative and personal APR.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button below. Our podcast is only made possible by great listeners like you.
So welcome back. So what I said before the break, what are the difference between representative and personal APR? Well, representative APR is an advertised rate that is at least 51% of those accepted for a credit deal will get. Remember I said to you before the break about the 51%? That means that almost half the people who are approved for the deal may not be eligible for the advertised rate and have to pay more. Now, do you really think this is fair? I mean, I don't think it's fair, but basically that's what they do. Credit card providers are required to display a representative APR when they advertise a credit offer for a card. In theory, only 51% of those who are accepted for the credit card will be offered the representative APR. If you are not offered the advertised rate, you will receive a personal APR. This will probably be higher than the representative APR because it is based on your credit score. So lenders are obliged to show representative examples of credit card deals on their financial promotions and advertising in order to obey industry rules and regulations. A representative example takes into account the annual rate of interest and will have to pay on everyday spending, together with an extra fee such as an annual fee. When you see a representative example, it will calculate using an assumed credit card amount. Say, for instance, it's 1,200. However, this does not necessarily mean you will be offered a credit limit of 1,200 of the interest rate shown, but it helps you figure out how much your financing might cost you per year. It's also definitely worthy to note here that representative APR shown on adverts or promotions will also refer you to the credit card purchase rate, which the interest rate you will pay when you buy things with your card. Other rates may apply to the balance transfers, money transfers, or cash withdrawals. There is different rates and different fees you have to pay for this. So be aware of what you're taking out and what your fees or liability look like as well. So what is a good, oh, whoop, let's go back. Let's talk about the personal APR as well. So what is a personal APR? It is the rate you are offered by the credit company after you have applied for that card. So have you noticed that every time you've applied for a card, they don't necessarily tell you what it is there and then. You get your paperwork. Yes, you do have time to cancel, but they tell you after you've applied exactly what that rate is. So it might be the same as the representative APR, but it's not always. A personal APR is influenced by your credit score and personal circumstances, such as salary and household spend. So remember when I talked last podcast about household income coming in? These are the things that you have to look at. And before that, we talked about credit. So having your credit scoring high and having your household income coming in, and that's high. These are the things that are positives in you getting a fantastic APR. Your credit card, your credit score depends on how you handle credit in the past. Sometimes people really mess up on their credit, and that's no fault of their own. They just got into a bit of a hard time. That can easily be repaired, and that's something that we always help our clients with as well, is repairing that credit. And it's not a magic wand, and it is not done overnight. It is a slow build, but once you get your credit repaired and looking really nice, then you can the world's your oyster, as they say. You're open to different opportunities, and using credit to your advantage is always a good thing. They always say good debt is good, bad debt is good debt if you know how to handle it and play the game that these creditors want you to play with them. You also have to make sure that you've repaid all your debts on time and not exceeded your credit limit or overdraft. How you manage your household bills also affects this as well. So, we're going through this whole economic drive at the moment, and it always depends on making sure you've paid your gas, your electricity, your water bills, because these energy companies and telecom companies will write on your credit report. They will strike you for late payments. So don't default on this. Don't make them win. And if you have a serious problem with debt, please reach out to us and we're able to help you and liaison with your creditors to help you reduce your debt to £1 with no interest added. Serious debt, however, issues such as like county court judgments, CCJs, or bankruptcy will, however, show on your credit report and stay there and may and will affect your credit. Other factors to take into consideration will be your age, previous credit arrangements, home ownership, your employment status, and if you are listed on the electoral roll. If you have anything in the joint agreement, their credit history will also affect yours. Generally speaking, if you have a good credit history, you should pay less interest when you borrow money. If you have a poor credit history, you'll probably pay more. So, what is a good APR? So in general, and it's a general rule here, with a loan, the more you borrow, the lower the APR will likely to be. With credit card rates often vary from 5% to 30%. The rate you are offered usually depends on how high your credit score is. It's also worth noting that these rates are usually based on rates for making purchases, for instance, online or in store. Rates for other transactions such as cash withdrawals definitely will vary. So make sure you look at what you're doing. And finally, on this note, 0% purchase and balance transfer to your credit cards often have a 0% APR for a promotional period, which typically lasts for between 3 to 40 months. It's important to stick to these terms, because if you come out of this, if you miss a payment or anything like that, they have the right to then put you on an APR that may not be favorable to you. So make sure that you pay on time. And when you, just before this promotional offer comes to an end, make sure you start scouring the market to get another better rate. If not, the company that you've got your cards with has got a better rate for you. A good credit score definitely can help you get your rate looking good. You can get an idea of what your credit score rate is by going online to all the credit reference agencies. And if you go to our episode 1, we've shown you the different various credit reference agencies you can apply for in the UK. So APR and interest rates. So what is that? When you take out a credit card, you will be told the interest rate and that you'll pay. This is the most that you can borrow. For example, if you borrow £100 and the interest rate was 10% a year, you know you will need to pay 110 to clear the debt. Credit card interest rates range again from 0 to 50%, but the average credit card charges about 18 or 19%. Credit cards with higher interest rates are typically aimed for those with poor credit histories, or for those who don't have a credit score history, such as young people. The only difference between an interest rate and an APR is that the annual fee for the card or arrangement fee is added on. Therefore, a credit card's APR will be higher than the interest rate if the card comes with an annual fee. All this might sound confusing, and even when I'm go through it, it can sound confusing and convoluting as well. But APRs are made useful when comparing different credit card offers, because it will tell you the overall interest rate rather than you are being surprised by the fees afterwards. APRs are also used to compare mortgages and loans, both of which you are likely to have fees attached to, so you know what you're expected to pay. So APRs and credit cards. When you compare credit cards, you will notice that some promotional offers typically will involve offering 0% interest on either the purchase or balance transfer as set for a period of time. Be wary of this as well. For example, you might see an offer of 0% interest on the balance transfer for 12 months or 0% interest on a purchase for 6 months. Make sure you don't get the two confused. If you choose an offer that gives you 0% interest on your purchase, it means that for the period stated, you are not to pay interest if you use the card for spending. The card will have an APR that will calculate using the interest rate when it reverts, excuse me, when it reverts from the 0% period. So after, if it's got a short period, say like it had 6 months and it's 0%, the following 6 months and beyond is going to have an APR. So make sure you're aware of what that actually is going to be, so you know what your payments are going to look like. So if you've paid it off, obviously you're not going to have anything. But if you're only paying the minimum, then it's going to be calculated back to that minimum, that amount on your balance. If you have a credit card with a 0% offer, make sure you pay at least a minimum each month. The minimum repayment will be printed on your statement, and this usually is a percentage outstanding debt or a cash amount. If you miss a minimum payment, you will lose any 0% introductory deal and interest will kick in. You might also incur a late payment fee too, normally around £12, as I said before, and it could affect your credit rating score. So today we've kind of gone through a Whistle Top Stop Shop tour, talking about APR, annual percentage rate, and I hope you got a lot from it and understanding it a bit. But in conclusion, the annual percentage rate, APR, is a standard measure of cost of borrowing money, including the interest rate and any additional fees. It is important for borrowers to understand the APR of any loan that they are considering, as it can help them compare the true cost of the different loans and make an informed decision about which one is going to be best for you. If you are a property investor looking to take out a loan, it is also important to be carefully consider the APR of any loan that you are considering. Why am I saying this? Because you need to shop around and find the best deal that suits you and what you're trying to do with your property or even your business. You may also want to consider working with a financial advisor if it's on the mortgage side, or a mortgage broker like ourselves, to help you find the right loans to suit your needs. In addition, be sure to read the fine print and fully understand the terms and conditions of any loan you take out to avoid any unexpected surprises down the road. So these are just steps that you need to take to get a best deal if you want to take out a loan. We hope you enjoyed this week's episode of the Savvy Property Investors Show and the annual percentage rate, APR, what it is and how it works. I really hope you got a better understanding. Next week, we're going to be looking at next 2 weeks, we're going to be looking at writing to your creditors. And this is really about understanding that when you're in debt, don't bury your head like an ostrich. There is so many things that you can do to help yourself and help yourself get out of debt that doesn't cost you the planet, that doesn't, there's people that is willing to listen like ourselves and help you through this whole process. It may feel scary that when these creditors are sending you late letters and things like that, it's easier to just put them to one side and ignore. But to be honest, the easiest thing for you to do is not to ignore and get on top of it. Because when you're on top of it, they can see that you're willing to make an effort and they're willing to work with you. So don't think that just because you've received untold letters from them that we can't save you from paying exuberant amounts of money that you can simply not afford. We're here to help. So if you're in debt at the moment and need our help, please feel free to reach out to us. You can contact us at contact@savvywomen.co.uk. All our information will be in our show notes. Please feel free to reach out to us and have a conversation with us that is held in confidence as well. Please don't bury your head. Don't get yourself into a fluff over debt or credit cards or loans or anything like that. If you're struggling at the moment, please, please, please reach out to us. We are here to help you. You remember, you can reach out to us for a free discovery call for more information about anything that you need help with. You can also upskill yourself if you wanted to get into property investment by going over and looking at our toolkit and getting some more information about that. Follow us on our social media, Twitter, Facebook, Instagram, LinkedIn at 50 Savvy Women. Thank you so much for listening in today. Don't forget to subscribe, rate, review, and download, and definitely share. We look forward to speaking to you in a fortnight, where we'll be sharing with you another episode on writing to your creditors and saving you money. Thank you for listening. Speak to you soon.
This week's episode of the Savvy Property Investors Podcast was brought to you by our sponsor, the Savvy Women Group. Thank you for tuning in. If you enjoyed today's show, head over to our website, www.savvywomen.co.uk to gain access to our free resources and more insights about our guest speaker today. Remember, we make your business our business, so you can unlock your full potential and improve your quality of life.